Hi, everybody. Welcome to the Insurance Journal's Academy of Insurance's weekly webinar after show. I'm your host, George, and joining me for the after show today is the director of the Academy of Insurance, Mr. Patrick Raitt, and today's instructor. Today's class was Emerging E&O Risks for Agencies, part two of a two-part series on risks and related to E&O and E&S. But today's bent was towards E&O, and our instructor is Mr. Chris Burand. Chris, welcome to the after show. It's great to have you. There's a lot of Chris this week. It's great to have you here twice in a row, twice in a week.
Thanks for having me. I appreciate it.
You're welcome. Well, we really appreciate you. This class was subject matter gold. Very, very well researched, well thought out, well articulated. Thank you so much for your help with this today. So in terms of emerging risks, you talked about changing E&O exposures and how exposures are changing and the insurance industry isn't keeping up with it collectively. You talked about property risk exposures. You talked about changing exposures due to technology. One thing that kind of leaped out at me was you talked about pandemic related losses and how there's no coverage for it, or we don't know how to cover the nature of some of losses related to the pandemic. And I know we do the odd class about coronavirus exposures, pandemic exposures, and I've done so for a few years now at the Academy. And it surprises me that you put that in as part of, some exposures that have changed or made other parts of the insurance industry change, and we don't know how to cover those losses. Why is that? I mean, it's been a few years now. Shouldn't we know how to cover those losses, or am I preaching to the choir here?
Well, yeah. Part of it is that we don't want to provide coverage for those losses.
Okay.
But
so not that we don't know how, but we just don't want to.
The industry can do it easily if they wanted to. But the fact is the carriers don't want to provide the coverage. The problem, there are a lot of problems with that. One problem is that if insurance companies keep going down the road of, I don't want to cover this, and I don't want to cover that, and I don't want to cover this, and I don't want to cover that, pretty soon we'll realize we don't really need the insurance companies because they're not really doing anything for us. And there is a lot of evidence that in the commercial world, traditional insurance companies are providing just a minority of the coverages required and purchased today anyway. I don't know when they're going to wake up to figure out that they're already by and large irrelevant, and they're just skating along on their momentum. So I think that that's a part of a wake-up call there. But this is an insurance agency and broker E&O, and the fact that this is such an important coverage, pretty much every commercial client recognizes they need this coverage now, and agents are silent, they're not talking about it, and they're not providing solutions. That creates a significant E&O exposure.
Sure.
And transparency is crucial there. And the fact that there are some coverages for it, they may come about and they may be available through really weird ins and outs, but there's some out there. Agents need to be aware of it and be offering it when possible.
Another E&O exposure you talked about was one that seems so obvious but so strange, as with some of these other coverages and things, is that you said never make the mistake of telling a potential insured or an insured that a particular kind of coverage doesn't exist. And I wanted to ask you, so if they find out the coverage does exist, they can get sued, if I heard that correctly. And my question was, if the agent just doesn't know that the coverage exists, like they just not true. I mean, I think like you attributed a lot of these problems to a lack of training in the industry. So if the agent just doesn't know the coverage exists, or their agency doesn't write that coverage, and I guess instead of referring them to another agency that does, they just say, it doesn't exist. Can they claim ignorance and not get sued, or is that hard to prove? Or in this day and age, can you throw a rock at the non-trained agent and,
Yeah. So the thing that I think a lot of agents confuse is that they go to an E&O class and the instructor says, well, you don't have a duty to offer these coverages. fine, I don't have a duty to offer, so if I go to court, I might win. That doesn't mean that you don't get sued. There's big difference between winning and creating a vulnerability to be sued.
Right.
When you're sued, you lose. It's just a matter of then figuring out how much. So I've had that claim. I've had that clients have that exact claim multiple times now, where they did not know the coverage existed. The claim was so large that the insured and their attorneys thought it was worth pursuing, regardless of whether there was any duty for the agent to know that it existed and then to offer the coverage. So, my clients have won all but one of those. One of them they lost, and but they ended up. When I say they won, they weren't found guilty, but they still paid hundreds and hundreds and hundreds of thousands of dollars. So yeah, that's real. One of the worst E&O claims I've ever seen in my life was one where the coverage was available, but it was not available for that insured. And the plaintiff attorney identified that it was available, but didn't know enough about insurance to know that it wasn't available for that specific insured. 7 years later, and a solid 6-figure settlement, everyone agreed that it was not an applicable coverage to that insured. But you want to sit around for 7 years in a lawsuit? They lost. They just didn't lose as much as they could have if they had been found guilty.
I'm relieved you said something after, I won't sit around and wait for 7 years. So I thought you were asking me. I'm like, but then you happily answered your own question. So thank you. Woo, thanks. Another quick question I have, based on that information, you talked about changing exposures and how for a lot of them, there are no solutions. And then later in the class, you talked about faux solutions. What's more apt to get someone sued, saying there's no solution, or presenting a faux solution that doesn't exist and is very litigatable? What's more, what's easier for someone to spot and then sue somebody for?
That's a really good question. I think that the frequency of the lawsuits on those two are probably pretty similar. It's a severity issue. Offering a faux solution is probably going to have a much higher severity issue claim than not offering a solution at all. Yeah.
Okay. Got it. Well, thank you. Patrick, what do you think of this topic in general and Chris's class in particular today? I know that surplus lines instruction is, I don't know. This class is amazing. I'm not trying to put words in your mouth, but in fact, I'll stop and you tell me what you think.
Yeah. So what was really, there were probably a dozen moments where you could simply write the quote down and that's enough for the price of admission. And Chris is 100% right. When you get sued for an E&O claim, even if you win the suit, you've lost, right? Because you likely lost the client, you lost a bunch of time. E&O deductibles can be very high, and so the agency's out money that would be the deductible. So even in winning, after a 6-year litigation, there's no win to that from the person, from the perspective of the person that got sued. Even if the settlement goes through, even if most of it's paid by the insurance company, that's great. But at the end of the day, what else have you lost? You've lost the relationship, at least with that insured. You've lost the relationships of other insureds, because people talk whenever you have an issue of that magnitude. It doesn't stay quiet. There's the only winning of an E&O claim is the E&O claim you don't have, in my mind, ultimately. And one of the things that surprised me, and probably shouldn't have, was not the undervalue of property, real estate, personal property, the underinsured value or the lack of insurance on intellectual property, where we are living in an electronic data age where all of our significant records are stored electronically. All of our much of our value as a business in many businesses is stored electronically somewhere, and not having coverage for that kind of IP theft or destruction of IP or whatever it is, that's a huge issue. And not just from an E&O standpoint, but from the agency standpoint, the their own underinsuredness, if that's a word. If it isn't, it is now. For their own intellectual property. That right there was the moment where I stopped and had to chew on that for a minute.
Well, Patrick, there was a lot to chew on in this class and a lot of things to stop at. Chris, I had a couple more quick questions for you about AI, and that was you talked about AI, and there was an instance where AI wrote case law that was incorrect, and it made it spurred on liability that shouldn't have needed to have been there, because ideally the AI was going to write the correct case law. Who is responsible for that mistake in this case? The AI programmer or the person that fed the case law into AI and then AI get it wrong, or the whoever's the administrator of is the AI programmer at fault, or who would be at fault in the AI case that you talked about?
So my disclaimer here is I'm not an intellectual property attorney. But if you read the AI contracts that you sign when you go to use it, all of the ones I've seen so far assign the user 100% liability. They have no liability. It's all on you. And I think a lot of people are too excited to use this without understanding that aspect. It's significant.
Yeah, in that particular case that you're talking about, the attorney that wrote up the briefing or the pleading with the court lost a whole lot more than money can buy, because once your relationship is shot in that kind of manner, there's not an easy road back from anything like that.
Chris, you had said, and I think this is my final thing, is that this is kind of maybe an insurance bit of Zen. I'm not sure, but you talked about BI, then you talked about contingent BI, then you talked about contingent on contingent BI, and I was wondering what would facilitate the need for contingent on contingent on contingent BI.
Well, it's kind of the insurance industry, our vernacular is lacking in many different ways. We use the same terminology over and over and over, even though it doesn't have the same meaning. And we just expect everybody to understand that in that context, this is the definition. So when we talk about contingent, when we talk about BI, we have contingent BI. We don't really have a good terminology for the next one. So I just kind of contingent on that contingent. So contingent BI is where the business itself may not suffer a loss, a covered peril, but they are still affected by a business interruption around them. Well, the same thing happens with what I call the contingent on contingent, but it's not that there's necessarily a loss that is a covered peril, or it's not necessarily a loss due to the environment around them. Typically, this is going to be a civil authority type of business income interruption. So, for example, most of the contingent business income policies or business income have a 72-hour waiting period. You have a hurricane evacuation order, but then the hurricane doesn't hit. Well, your business is still shut down for 72 hours, but you have no coverage because you had a 72-hour waiting period. Right. Well, it'd be nice to have some coverage there. Or let's say that you have a COVID claim, a virus claim that comes in and your business is shut down by the health department on suspicion that you have COVID spread all over your tables. Well, come to find out you don't have COVID all over it, but you've been shut down for 2 weeks while you've been testing and cleaning. Where's your coverage? Your loss isn't any less in that situation than if you probably had COVID spread over the tables. The industry needs, and agents need to find, because some of it is out there, some of it's pretty good coverage, this kind of contingent upon contingent BI. If you have better words for it, I'm all for it, or better vernacular, better titles. But there's some really neat coverages, and I would say 100% of all the agencies I've ever audited did not know those coverages existed. Massive E&O exposure.
Well, I don't have a better word for it, so that's one of the reasons we have the academy, to try to teach people that the best words possible. I mean, it's kind of a Confucianism, contingent on contingent on contingent, so and so forth. I was wondering, you mentioned, you talked about the figures and what are spent on mass litigation, television ads and prevention ads. Number one, are we in the wrong business? And number two, should E&O agencies write exposures for any mistruths or undisclaimerable things asserted in mass litigation television ads that cause a lot of stress that way?
Yeah, I don't know. I imagine some of the big brokers probably do provide some coverage at that level. I imagine they have some kind of proprietary form that they've developed for that. For regular agents, it's probably not a good idea, and it's probably not available. So it's, maybe that's the new revenue train for the Insurance Academy, is to go and get advertising from the trial and private equity people, but it's significant. It is really significant numbers.
I like how your unspoken disclaimer is not answering my question about, are we in the wrong business? You answered it by not answering it. I appreciate that. Don't say anything else about it. That's it. That's your answer. This class, you said something about the insurance industry being collectively screw-ups. You mentioned that in terms of this coverage, you mentioned the scariness of a lot of lack of understanding of things that could lead to E&O suits. And at the end, you talked about how things are really cool, and that we're in the middle of we can make gold out of we can knit gold out of this steel wool, that is insurance. So I'll ask you one more thing. Does that level of drama, is that what keeps you really interested in teaching insurance class? Because this is actually a very whole arc of a rom-com almost,
No one's ever described anything involved in insurance as a rom-com. That's a new one. That's good. I don't know how else you describe our success rate when we are providing coverage for maybe 10% of the exposures that our clients have in commercial lines. That's pretty much a disaster and pretty good description of complete incompetence. But out of that incompetence for the really good professional agencies is there's 90% of the coverages are yet to be written. Man, think about all the extra money people are leaving on the table when you only write 10% of what needs to be written. You don't need new clients. You just need to write the clients you have correctly. It's not rocket science. So yeah, that's the thing that keeps me going with teaching some of this stuff is insurance industry done well is probably the greatest financial tool ever invented for protecting the common person's wealth, well-being, retirement, and even their reputations to the successive generations. And I think we, in this industry as a profession, we have a duty, and I really mean this, I think we have a duty to do it correctly and to provide that protection. And the more I can get that message out to people and get a few people to go along with it, then I feel like I've done my job.
Absolutely. Well, you did a great job today, Chris. So thank you very much. I'm sure you don't need me to tell you that, but we all really appreciate your help and your insight as always. Thank you so much. And Patrick, thanks for coming to the after show. It's always great to see you here too.
Absolutely. This is a great one for sure.
Absolutely. Well, agreed. On behalf of our instructor, Chris Burand, and our director, Patrick Wraith, this is your host, George, saying thanks everybody for coming to the after show today. Let us know. We start that chant of "We want Chris, we want Chris, we want to have Chris back soon." And like Chris said in the class, check out our Fred Fisher classes too. Our coverage classes from Fred Fisher are fantastic as well. So, on behalf of everybody, I'd like to say take care of yourselves, and we'll see you next time. Have a great day, everyone.